What is up, guys? My name is Hassan, and welcome back to another dividend investing #good investing. When we talk about good investment, we're talking about investments where we're able to sleep well at night and not worry about all the volatile market that's going on and all the craziness that is happening because we invest in solid dividend companies. Today, I'm going to show you guys my M1 Finance portfolio and the companies that I'm invested in addition, give you guys an update on my monthly tracking sheet and the dividends I received for the last 2 months. As always, before we continue, I have to give you guys a quick disclaimer. I'm not going to go over the disclaimer because I do this every single week. Make sure you guys check out the disclaimer in the description below. So this is my M1 Finance portfolio. It's currently at $10,072. So we reached a big achievement, a big milestone because our portfolio has finally reached $10,000. And when it reaches $10,000, we actually unlock new features. So if we go to M1 Finance and we click on the borrow, you guys can see that now I'm eligible to borrow up to 35% of my portfolio. In other words, $3,500 at an interest rate of 3.5. But it even gets better. So if we have M1 Plus, which you have to pay like a monthly membership fee, you actually get to borrow this 3,500 or up to 35% of your account and at an interest rate of 2%, which is actually great benefits. Remember, as a Muslim investor, we do not involve ourselves in interest, or we stay away as far as possible from paying interest. So another cool thing about this M1 borrow is that you can use this money to buy more extra stock, pay off your wedding, maybe start a business. Purpose of this M1 borrow is that for you, in case we have an emergency, instead of you dipping into your portfolio, you're able to borrow from M1 Finance, let your money grow and pay off your emergency fund and then go back to investing. So this is some cool feature, but remember, we want to stay away from interest as much as possible. So currently my portfolio is at $10,000. So I'm going to show you guys for our 1-day data. We pretty much for the last 1 day I received $3.72. If we look at for 1 week, we can see that I'm up about 5% or 5.7%. During that last 7 days or 5 days, I received almost $12 in cash dividend, which I didn't even have to work for. And then if we go for our monthly, we can see here monthly we have increased about 14% and earned a dividend of $41. This is almost enough to pay my phone bill. And then if we look at for 3 months, so 3 months we made about 25% because the market has been beaten down because of the coronavirus. As we're increasing and as we're getting better, I earned 25%. And during this time, I received a dividend of $92 in the last 3 months. And then if we look at for 1 year, I'm up almost $300 in dividend payments. So here we see the dip because of the coronavirus. The market dipped a lot, and then around April or end of April, we actually broke even and then we went higher. So currently, if we look at our all-time high, we're at 13%, or I made $360 in cash dividend payment. I plan on continuing to invest, continue to add money. If you guys have noticed or have been following me, I have 2 publicly traded accounts that I show to my viewers, and then my Robinhood is actually double the size. I actually add a lot more money into my Robinhood portfolio, but this one I eventually plan on living off of it. I do not add as much money as my Robinhood portfolio. So now I'm going to show you guys the S&P 500 and how it has been doing over the last few weeks. So this is the S&P 500 currently at 3,200. If we look at for 1 year, and this dip again is because of the coronavirus. So if we take it from our all-time high to our current, S&P 500 is only down almost 5% from its current highs. So another thing that I want to talk about is that in the recent few days, we actually had a huge pop in the market, and that's what we're going to talk about right now. So if we go look at the United States unemployment rate, this is the unemployment rate for July, August, January, and April. We can see that for the most part, the unemployment rate for the United States is around 3.7, 3.5% for the most part. But if we look at, say, January, and then we see February and March here, in March, we had a pop in the unemployment rate because of this coronavirus, and then April, it jumped to 14.7%. May, our last month, the unemployment actually decreased to 13.3%. That is the main reason why we had this huge pop in the market for the month of May. Analysts, they thought the unemployment rate was actually going to be 19.5%, but in reality, it turned out to be 13.3, a lot less than what the analysts thought. That's why we had this huge rally in the market in the last week or so. Another thing that I want to point out is that here in September, the analyst expects this unemployment rate to actually go back. They actually think that we're going to have the second wave around September. I actually disagree with this. I think that they are wrong. We're not going to have the second in September. We might have it in October or November, because I'm going to explain why that's the case, how the coronavirus or similar virus works. So I'm going to show you guys an article. So this article is by Science Daily, why the flu virus is more infectious during the cold winter months than usually the summer. And the source is, this is by National Institute of Health. So it's a credible source. So this is actually talking about influenza, and which is a very similar virus to the coronavirus. So pretty much this article is saying that these viruses are able to survive a lot more better during the winter months than the summer months. They're able to transmit this disease and this virus more rapidly in colder weather than summer weather. And I'm going to talk about that, why that's the case. So here they're saying that at winter temperature, the virus outer shell, or this covering of this virus, they have like this gel-like cover that during the winter months, it actually, because of the cold temperature, it hardens and it protects itself, and it's able to pass on from person to person. But however, at a warmer temperature, outer shell actually melts. If the outer shell of this virus melts, it actually dissolves and gets weaker and eventually dies out. Here in the article, they gave an example of a M&M. So the way it looks like that, we all tasted M&M. M&M has this solid outer shell. It's not melt. We all want to eat it, right? It has this outer shell. We can pass this M&M from person to person. If someone gives you M&M, you'll take it and eat it. But if someone gives you an M&M that is melted and dried, you wouldn't want that. Same thing. This virus is able to travel safely and infect more people when it has this outer shell. But when it's melting, it gets weaker and eventually heat and moist destroys it. So I want to come back to the unemployment rate here, that they're saying that in September, they're expecting this coronavirus to pick up. They're expecting to rapidly increase again, but I disagree. I don't think that in New York City or most part of the United States, for the most part, September doesn't get cold enough for this virus to survive better. I would say that during September, it doesn't get cold enough, so this virus is able to, it won't pick up as much. But I think that November and December, we can have, or we see another second wave if we don't completely get rid of it, or in some form at least decrease it. So now I want to show you guys my monthly dividend chart. This is where I track how much money or dividend I receive month after month, and we can see that the overall trend of this monthly income is increasing month after month. So if we look at for the last 6 months, like say we can say in December I received about $26, and then January about $14, and then February $20, March $38, April $25, and then for the last month, May, we received about $20. But the overall trend is up, which is good. One of my goals is to get $100 in dividend income. Another thing that I want to point out about this chart is that how the coronavirus actually affected my dividend income. A few of my companies actually discontinued their dividends for short term, and we can see that in my chart. So here we can see that after March, we can see that we have 2 consecutive months of decrease. If we look at our chart, we do not see this anywhere else. So here we see 2 months of decrease. Here we see 1 month decrease, and then it goes up. Again, it decreases only once. Everywhere throughout the last year and a half, every single month, I only had 1 single month of decrease, and then it would increase again. But however, for the last 2 months, I have 2 consecutive months of decreasing dividend income. This is mostly because of the coronavirus. So guys, if you guys haven't made one of these charts, make sure you guys make one of these. It actually motivates you to continue to invest and save more of your money. As always, if you guys made it this far, make sure you guys hit the like button and subscribe to my channel. Another thing that I want to show you guys is that here, if I look at the total here, currently I'm at, for the last year and a half, we made about $285. If we scroll down here, if you guys look here, I'm averaging around, for the last 6 months, around $24 in monthly dividend income, which then I'm able to reinvest and grow my money even more rapidly. Now I want to show you guys the monthly dividend I have been receiving for the last 2 months. So if we go to activity, we're going to click on dividends only. We're going to put the date range. So this is the dividend I received for the last 2 months for April and May. We received about $2.55. April 1st, we received $3.43 from Macy's. And then we got from Merck about 24 cents. PKG, $2.58. Recently, I actually sold this company. I moved out of it because they're not as growing as rapidly as I want. But this company, I got rid of it. Another thing is that they also have a little bit higher debt than what I expect them to have. Vermilion Energy, VET, paid me $4.74. And here you guys see a negative 71 cents. So this one, foreign tax withheld. So this is tax that Canada withheld. Good thing about this 71 cents is that when I do my taxes, I don't have to pay dividends or I don't have to pay taxes on this money that I earned from Vermilion. So if I pay the Canadian 15%, I don't have to pay for the United States. Pambina, $2.59. And then again, this is a Canadian company which took their 15%. So Rio, another company, paid me about $4.99. Cisco, $3.12. And then Gentex, check this company out, another solid company, paid me about $1. And then WD-40 paid me about 11 cents. A lot of you guys actually use this spray. We have Activision, paid me on May 6th about $1.51. And then we got MMP, $10.31. This is actually a MLP, Master Limited Partnership. This I don't actually have to pay taxes on this dividend. They actually count as more like long-term capital gains once I sell the company. But currently, I don't have to pay any taxes on this dividend. And then we got another company, AOS, 37 cents. Texas, $1.60. And then again, Pambina paid me about $2.89. PetMed paid me $2.51. I got American Solutions. So actually in my Robinhood portfolio, I actually sold this because they got overvalued, but they just kept growing and growing. And sometimes we don't know why they're growing, even though that they're overvalued. So this was the dividends I received for the last 2 months. So guys, make sure you guys subscribe, hit the like button, and you guys should constantly be adding money to your portfolio so you're receiving all these dividends. Even they're small, they add up to be a lot end of the month. So guys, before we end this, I want to cover a question. This question is by Ryan. He's saying that there are a lot of new investors coming in and making big returns buying risky companies. I'm worried this is setting them up for future failure. What do you think and how can we help? So Ryan, this is a very excellent question, and my opinion is that even if we were to tell them to invest in solid companies, they wouldn't even listen because they're making these 20% return. They would say, my strategy is working, screw long term, buy and hold, I'm getting rich. And this is the attitude I think most of the new investors will have buying these crazy high valuation companies. They will learn one way or another. Hopefully they learn from their mistakes. It might be a costly one, but hopefully they learn and move on. On a positive note, they will learn early on in their investing career, so they'll have a strong foundation and then move on. Yes, there's a lot of hype and exciting going on and everybody's following the herd, but I think that eventually everybody will catch on and hopefully they invest into solid companies moving forward. As always, guys, if you haven't subscribed yet, hit the subscribe button, hit the like button, help the channel grow so we can reach more people and help out more individuals and grow together. Remember that in investing, we're all on the same team. We're not fighting against each other. Congratulate myself for reaching $10,000 in my M1 Finance portfolio. As always, guys, thank you. See you next time.